let's switch focus and let's also talk about what's happening within the real estate space. And joining in right now, Anshul Jain, the MD, India and Southeast Asia at Cushman and Wakefield, joins in on the show right now. Anshul, hi, good morning. Good to have you on the show. Muted trends, Anshul, in the commercial real estate market in 2020. What's the outlook now for 2021? After the first quarter of performance, can we really expect a rebound, and a significant one at that?
Of course, the question is in two parts, so let me just address 2020, I think, very briefly, actually, because that was very much expected, as I said. In April, when the lockdown started late March last year, at that point in time, the visibility for real estate and commercial real estate was next to nothing. And of course, over the third quarter and the fourth quarter, we saw the demand kind of bouncing back. And a lot of deals where we thought, which have disappeared, actually resurrected themselves, but of course at a lesser quantum of demand than what they were before the COVID crisis hit. Now, looking forward into 2021, I think as we kind of moved into this year, we were actually seeing a huge pickup in demand. So fourth quarter of 2020 did reasonably well. And 21, the momentum was pretty strong through January and February. And of course, by the end of February, early March, as the second wave started to rear its ugly head in Maharashtra to start with, I think there's a note of caution which everyone took. Now, I think what's going to happen, as much as we can kind of see the market, and it all really depends on how fast and how long would the COVID second wave last, and how fast it kind of subsides, right? Our view on this is, if I look at COVID waves around the world, they've lasted between 8 to 10 weeks, the waves, right? So if that happens, and the big fundamental assumption here is that by end of May, we see a sense of normalcy returning as far as the disease is concerned, the numbers are concerned. I think we'll see a very fast bounce back in the market. The first quarter absorption does not worry me at all. The first quarter is usually slow. And the kind of queries and the momentum we had in the market in January, I think was phenomenal. I think provided the assumption on COVID numbers stand and that subsides by end of May, I think we've got 2 quarters to recover, and I think that's plenty of time. If that happens, I think we'll be in a slightly better place than we were in 2020 overall. And I think in 2020, the numbers were 20 million net, 50 million gross. I think we'll be probably 10 to 15% above that in 21, provided we have sense of normalcy returning by end of May.
Okay. Anshul, the second wave will clearly make a deep impact on one returning to office, because most of us are not just working from home, but it's now work from anywhere, given that it's been a year into the pandemic, or even more at that. You think this is going to get impacted further now that you are seeing a big spike come in cases across the country once again and again, mini lockdowns, curbs and curfews being put in place?
Well, absolutely. I think 2021 is going to be a mixed bag of a year, therefore. Will it have a long-term impact? I don't think so. As I said, I think 21 could be even slightly better than 2020, because if the wave subsides by end of May, I think it'll be pretty clear. And don't forget, the waves have subsided. The second wave subsided, as in it's kind of started to come down in Europe and in the US, right? I think, there'll be a better realization at that stage that perhaps we'll see multiple waves, and those waves would the length and the severity of the waves then depends on the vaccination and the success of vaccination. But it'll also be clear that once waves come down, life comes back to normal, right? And I think that's what we're sort of betting on. As far as the work from anywhere is concerned, I think we've seen a substantial shift in discourse from early last year or second quarter last year to where we are today, right? There were people sort of at second quarter last year, third quarter last year, there were a lot of companies which were in our decision making on the boardroom tables, really discussing the need for the offices, etc. I think you've seen a number of global CEOs now come out and said, well, the offices are here to stay, of course, in a very different format. There'll be a lot more flexibility for people. There'll be a lot more sort of work from anywhere. But office will remain the central hub for business, and that's not going to go away. And you've seen, Google sort of, recently announcing the intention to come back to office. And in fact, they have said that none of their employees could work from anywhere beyond an hour from where the office is. Similar statements by Amazon, Netflix, Closer Home, Wipro. So you see a lot of thought process of sort of, changing the positions and saying that office remains central. Will 21 continue to be disrupted as far as work coming back to office? I absolutely think so, yes. Will there be therefore a long-term impact? Fundamentally, there will be, but in a very different way. It will just be a different way of working. Offices to remain central to businesses.
Okay. But tell me, Anshul, have companies begun giving up their offices or renegotiating on the current rentals?
It's a mixed bag. So have companies started giving up space? I would say, a number of firms in, your kind of sub 50,000 foot range, and the smaller you were, the faster you were able to sort of give up. Definitely gave up space at some point in last year. I think what's going to happen this year is the portfolios will get rebalanced. We will see a lot more flight to quality. So let's say if a company X has 5 million square foot of space, they would probably upgrade the poorest part of their portfolio, first generation buildings, quality not up to scratch. So let's say that's the last million or last 2 million square foot. So they might upgrade that. And as they're upgrading, they will take cognizance of the fact that, the work from office could only be 60% for people. There'll be a lot more flexibility and so on and so forth. So they might give up 2 million, but they will take up perhaps 1.5 million square foot in brand new, better quality space and so on and so forth, right? And therefore, I think the demand will kind of slowly creep back over next year, 22, 23. But the demand for better quality buildings, for well-managed space, buildings which are, which position themselves as, A grade in employee health, wellness, and it's not just lip service, but they're actually doing work to position their building in that manner. I think you'll see a lot of demand coming back in those areas.
Sure. Also wanted to understand, whether or not one is likely to see consolidation within, the commercial real estate space, or rather companies which enable you to work out of office, the likes of your WeWork, etc.
So, look, serviced or managed workspaces or co-working as the broad segment is called. I think, there were various stats in India, roughly 300 co-working players across the country and so on and so forth, right? Clearly, and a lot of those were kind of catering to small, individuals who were kind of wanting to just get a desk and work. And of course, early stage startups, and a lot of those were also had pivoted and were only servicing large companies and large enterprises, right, or large corporate clients. Will the consolidation happen in that industry? Oh, absolutely, right. It's the fundamental rule and law for any industry. When there is a lot of investment happens, a lot of players come in, and at some stage, the industry has to consolidate to allow it to mature up. And in this case, I think COVID has just rushed it a little bit. Had COVID not happened, maybe another couple of years, the industry would have consolidated anyways, right? So I think COVID has rushed it, and it's also changed the business model. So what we're going to see post-COVID is the stronger ones are going to survive. We're probably going to see no more than 8 to 10 national players who've got very strong financial bandwidth, who've got the ability to understand the corporate needs and tailor things accordingly. You will see people who are kind of more focused on enterprises or large corporates surviving. So I think about 10 odd large companies will do really well. I'm not saying every small co-working player will not survive. I think everybody will pivot their model. There will be consolidation, but the larger companies would pivot completely and offer a lot more enterprise, a lot more flexibility that the enterprises will need or companies will need as they go forward in their in their business plan. Now think about it, right? I mean, you've got a major global crisis. You still need office space. If I'm a company X, and here is, let's say, WeWork, which you mentioned, or an equivalent top 10 provider who's willing to fit out the space. So I don't need my capital if I'm going into their space. They're going to fit out the space as for my needs. The space will look like mine, and I have the flexibility without really putting my capex in. It's an ideal model. So I think you'll see a lot more business which is going towards probably companies who are providing flexible workspace in the near future. And as I said, the stronger companies will become stronger once when they are able to weather this storm.
Sure. Great to have you then on the show. Thank you so much, Anshul, for taking the time out and speaking with us about the trends that you're foreseeing and you're witnessing on ground within the entire commercial real estate space.
Having